What's up, everybody? Welcome back to Treasury Orange. I'm Tyler, and we've got perfect timing on this one. ASST shareholders voted last week, September 9th, on the merger with Strive Asset Management. It was approved with a slam dunk, and we're about to witness the birth of something completely new in the Bitcoin treasury space. This isn't MicroStrategy 2.0. This isn't another metaplanet. This is a fast-growing asset manager bringing institutional sophistication to Bitcoin accumulation. Led by former CalPERS fixed income manager Matt Cole, they're about to bring Bitcoin Alpha to the treasury space. Before we get into it, this podcast is fueled by Bang Energy. When I need to crush a project, I grab one of these. With 300 milligrams of caffeine, it's enough to get me and you through anything. Grab yours today, wherever energy drinks are sold. Let's start with the chess move nobody saw coming. Strive Asset Management is a $2.3 billion asset manager founded by pro-capitalism, anti-ESG crusader Vivek Ramaswamy. Ohio's next governor, I might add. We're calling that one here early. They could have gone public through a traditional IPO. Instead, they're reverse merging with asset entities, ticker ASST. ASST was a tiny public company with minimal operations, but crucially, an effective shelf registration. This gives Strive immediate access to capital markets without the time and expense of an IPO. IPO companies usually have to wait a year to be able to register to sell more shares. ASST's main line of business was setting up and helping moderate corporate social media platforms, particularly Discord. One of the other cool things their reverse merger structure unlocked was something no other Bitcoin treasury company has done: the ability to offer tax-free Bitcoin for equity swaps. They didn't raise much capital this way, only 69 Bitcoin, but I saw it as a cool nod to Bitcoiners sitting on huge unrealized gains. Selling Bitcoin triggers a taxable event, potentially 20 to 30% or more in taxes, but under Section 351 of the tax code, contributing Bitcoin to Strive in exchange for equity can be structured as tax-free. Think about it. You're a Bitcoin whale sitting on millions in gains. You want diversification, but don't want the tax hit. Well, Strive offered a way to convert some Bitcoin to equity in a Bitcoin treasury company, defer taxes, and maintain Bitcoin exposure through their stock. I love that innovation. So, Strive isn't some software company pivoting to Bitcoin. They're an asset manager with institutional DNA. Let me break down what that means. Strive chief Matt Cole isn't just a random Bitcoin maximalist turned CEO. He's a CFA with years of experience in traditional finance. Before Strive, he ran the California pension system's fixed income portfolio. It's pretty nice to have your CEO understand debt markets in that way from his experience running one of the biggest pensions in America. His CFA background gives him a depth of understanding of all levels of the capital structure. He understands risk management, derivatives, and most importantly, how institutional investors think. The executive team includes former Citi, JP Morgan, and hedge fund vets. They speak the language of Wall Street, which matters when you're trying to raise billions of dollars. Strive already manages 13 ETFs with $2.3 billion in AUM. They have operational infrastructure, strong compliance, and pivotally, fee-generating revenue from their existing business. Unlike pure-play Bitcoin treasuries, they have some modest cash flow to support operations. Although Bitcoin accumulation has become their major line of business, we're curious to see if they keep building parallel asset management revenue given their rapid rise. Now here's where it gets really interesting. Strive isn't just buying and holding Bitcoin as a beta play like we've seen from some companies like Strategy. They're implementing what they call Bitcoin Alpha. Here's their playbook. First, merger arbitrage. They plan to acquire overcapitalized biotech companies trading below their net cash value. Imagine a company with a failed late-stage clinical trial. They might have $150 million in their coffers and $40 million in debt. That's a net cash position of $110 million. Now imagine the stock is trading at a market cap of $75 million because of their failed clinical trial and not much near-term research prospects in the pipeline. Strive could come in and say, offer $85 million to buy out the company. They would arbitrage their cash position and use it to buy $25 million worth of Bitcoin instantly. Shareholders of the company are happy because they get out of an underwater investment for more than they could have. Maybe Strive could sell off some of the other patents the company has, or hold on to them until market conditions are more favorable in the biotech space. It's simply a feat of financial engineering. Second, structured products. Strive are looking to buy bottom tranches of structured Bitcoin credit vehicles at a discount to their Bitcoin position. Think of companies that lend Bitcoin that is secured. Strive could come in and buy some of the positions that are more likely to default, but are secured by Bitcoin. Strive wants the Bitcoin, and the creditors want some cash to get out of their risky positions. It's a win-win. Third, distressed Bitcoin claims. Strive similarly are looking to gobble up Bitcoin claims like the coins that are coming back to Mt. Gox customers. Those customers haven't been able to get their Bitcoin since the exchange went bankrupt in 2014. Some of these are trading on secondary markets for a discount to their US dollar value. Since Strive are interested in accumulating as many Bitcoin as possible, they're happy to get discounted Bitcoin delivered at a later date for their shareholders. Fourth, yield generation. They're exploring ways to generate yield on their Bitcoin. This may make a hardened Bitcoin hodler bristle at the thought, but when you have a seasoned team of pros like you have at Strive, I expect them to target institutions that are well capitalized to generate a yield on their Bitcoin, and to do it in small enough steps to minimize risk. They could also explore brokering over-the-counter Bitcoin deals. That's where large buyers and sellers are matched to prevent price slippage on the Bitcoin price. They could facilitate these transactions and provide liquidity for a fee that could generate even more Bitcoin for the company. All of these alpha strategies are on top of the typical beta strategies to Bitcoin that other treasury companies are pursuing. We expect them to roll out bonds when pricing is favorable and to build out a preferred equity debt structure. Who better than a California pension fixed income alum to structure credit products for the $300 billion addressable bond market? That's CEO Matt Cole. Now let's talk numbers. Post-merger, here's what we're looking at. ASST legacy shareholders will only own 5.8% of the newly merged company. Existing Strive shareholders and PIPE investors will hold the rest. PIPE in this case means private investment in public equity. That's private money coming in to fund the reverse merger. Strive is initially raising $750 million from PIPE investors. These investors were awarded some 555 million shares at a cost basis of $1.35 per share. The PIPE fundraising included an additional $750 million kicker in additional warrants that can be exercised to fund more Bitcoin purchases. There are some stipulations on where Strive's stock price must trade above certain thresholds for a period of several days before these vest. This ensures that the stock price must be performing well for the additional capital to come in. These warrants are also at a price of $1.35 per share. This is significant dilution to shareholders, but it will add permanent Bitcoin capital to Strive's balance sheet. Provided there's enough interest in the stock, in time, the market should eat a lot of this sell pressure. We've seen some recent Bitcoin treasuries trade below an MNAV of 1, which is the net value of Bitcoin on their balance sheet. Given the size and alpha strategy that Strive is implementing, we don't expect that to persist with ASST. Given that we're in a Bitcoin bull market, we here at Treasury Orange expect the company to trade maybe even at an 8 MNAV for the next couple months, because we expect them to raise $10 billion over the next year. That 8 MNAV can justify the accretion to shareholders. CEO Matt Cole has said that they declined convertible bond deals at the outset of the merger because the terms were not favorable to shareholders. These converts, as they call them, were key to ramping up the leverage on MSTR when they began their Bitcoin strategy. Strive could go to this well if terms become better as Bitcoin's price rises, and we think they would be well served to dip their toes here to get the flywheel moving. At current prices, the initial PIPE will bankroll 6,500 Bitcoin to start. Not quite strategy levels by any means, but remember, they're focusing on quality over quantity. They're prioritizing Bitcoin per share growth over absolute holdings. This will be key in driving further accumulation and a way to bolster their share price in both fiat and Bitcoin terms. Let me be clear about Strive's competitive advantages, because they are significant. As a registered investment advisor with existing SEC relationships, they can navigate compliance more easily than treasuries who are newer to the space. That gives them their regulatory advantage. Institutional credibility. When pension funds and endowments eventually allocate to Bitcoin treasuries, Who do they trust? A converted widget company or a non-financial shell? Or did they trust an established asset manager like Strive? Tax efficiency. The Bitcoin for Equity Swap program shows a commitment to Bitcoiners and could be the tip of the iceberg in unique offerings. I'm looking for some creativity in their inevitable preferred equities. Operational leverage. Their existing infrastructure means lower costs and faster execution than building from scratch. The instant access to a shelf offering allows them to exploit the equity market if their stock trades at a high premium to its Bitcoin holdings. Capital markets access. Their Wall Street relationships open doors to financing options others can't access. Matt Cole put it perfectly. We're not trying to out-Sailor Sailor. We're building the institutional-grade Bitcoin Treasury company. Now, let's address the risks, because there are some unique ones here. Their execution risk. This strategy is complex. Financial engineering can go wrong, and Strive hasn't proven they can execute this Bitcoin playbook yet. Cultural fit risk. Strive's institutional culture might clash with Bitcoin's revolutionary ethos. Can they maintain credibility with both Wall Street and Bitcoiners? Competition risk. If this model works, bigger players could copy it with deeper resources and connections. Lower upside potential. Their risk-managed approach might mean less explosive returns than pure-play Bitcoin treasuries. They had an aversion to convertible bond funding. This could play in their favor, or it could take away some of the juice from the interest in the stock. But here's the thing. These risks might actually be features for the institutional investors who want Bitcoin exposure without the YOLO approach of some other Bitcoin treasury company. When it comes to leadership, CEO Matt Cole has been everywhere spreading the message of Bitcoin and Strive. This guy gets it.
Hedge funds, pensions, endowments, they'll not invest in the 10th Bitcoin strategy company.
So I think that brand value is important, and you've seen that with Tom Lee's company, but I just have to call out, Ethereum makes for a horrible asset for a treasury company because Bitcoin perpetually goes up versus fiat currencies because they're being debased. Ethereum is like a company, and a perpetual strategy as a treasury asset to buy Ethereum or Solana or Dogecoin or Pepe coin, I don't really care. It's building a house on sand. And so the brand can accumulate the coin quickly. It can make the coin go up, but ultimately, Tom better start buying some Bitcoin, or I think his days are numbered.
Cole isn't just a Bitcoin evangelist giving philosophical speeches. Although he's grounded in that, he's a tactician who sees Bitcoin as pristine collateral and is building the infrastructure to monetize that insight. Strive's real competition isn't other Bitcoin companies, it's traditional finance. The broader team is equally impressive here. CFO Ben Pham has been instrumental in building excitement around the merger. Chief Risk Officer Logan Byrne has had his hands full with the complexities around this deal. VP of Bitcoin Strategy, punter Jeff Walton, has been a catalyst at building a community around Bitcoin treasury analysis. Asset Entities CEO and Strive Chief Marketing Officer Arshia Sarkani understands how social networks have been evolving at light speed. Look for all of these guys to cultivate a rabid following of shareholders. Even though founder Vivek Ramaswamy isn't actively managing the company, his ties and previous successes should shine a light on investors who might otherwise pass on the Bitcoin play of Strive. Time for the Treasury Orange rating. This one's interesting because we're rating potential, not track record. We might have to wipe the slate clean after the dust settles. They've talked a big game about their execution. Commitment to Bitcoin. 5 out of 5. They have a strong commitment. They view Bitcoin as rock-like collateral to build an economy around. Leadership. 5 out of 5. They have world-class financial expertise. Leverage posture. To be determined. They're coming to market with no debt outside of the warrants that are sure to execute. Beyond this immediate dilution, blue skies above. We like the potential here. Intelligent stacking. 2 out of 5. They're coming later to the game, so they're starting from a higher cost basis. Growth potential. 3 out of 5. They're starting with 2 consecutive $750 million capital raises. We love the aggression, but will this cap the upside? Market position. 4 out of 5. Like I said, $1.5 billion in Bitcoin from the jump is huge. That should put them ahead of Coinbase and Michael Saylor. They're coming for you. Community engagement, 4 out of 5. Because of the merger, they've had to remain mum on some fronts, but we're gushing about the potential Matt Cole and Jeff Walton will bring to the community surrounding the stock. We've already heard online streamers talking about ASST before they've even begun their accumulation of Bitcoin. Hell, I've been posting about their alpha strategy all over Twitter. Color me excited. We've got to give them bonus points for the most innovative accumulation strategy on paper. However, when it gets down to brass tacks, will they deliver on the hype? Time will tell. Strive earns our preliminary A-tier rating with an asterisk, execution pending. They have all the ingredients for success, but we need to see them deliver. Well, that's a wrap on Strive Asset Management, ticker ASST. With the shareholder approval of the merger in the books, it's time to put up or shut up for the company. Next week, we're doing something special. We're recapping the Bitcoin treasury space in our first live news rundown. Stay tuned for that on YouTube and X. If you found value in this analysis, subscribe to Treasury Orange below. Let us know in the comments who you want to see us cover next. Until next time, this is Tyler from Treasury Orange. Stay orange, stay informed, and remember, we're still early.